Hello, everybody. I'm Mark Porter, CEO of Highwire Networks, Inc. We are here with Chris Sorensen today, and we're going to discuss the results of our first quarter and our press release around those results. Thank you for joining us. With that, I'll turn it over to Chris to discuss the financial results first.
Thanks, Mark. So we're going to talk about Q1 2022 on a pro forma basis, just like we've done in the past few quarters. First off, net income came in at just about $5 million, so a very strong quarter there. We've talked about non-GAAP in the past. That was right at about break even. Revenue on a year-over-year basis, Q1 of 22 versus Q1 of 21, was a growth of 82%, so very strong year-over-year on that performance. So when you look at the string of the last three quarters in a row, Q3 of last year, year-over-year, was a little over a 20% growth. Q4 a little over 40%, and now we're just a little over 80%. So you can continue to see very nice growth pattern on that revenue. Again, that's on a pro forma basis. So, we've talked about the last few quarters, what our strategy is as a company. This revenue is right on the timing of the milestones that Mark has laid out for the company's both short-term strategy and long-term strategy. So we're going to continue to build on that throughout this year of 22 and anticipating to have a very strong year from a revenue standpoint and a bottom line operating performance standpoint. Mark, I'll turn it back over to you.
Cool. Thanks, Chris. As Chris mentioned, we've been very focused on the revenue growth and setting milestones for the company that we can reasonably achieve. We've also been focused on aligning that revenue to our strategy as we look long term. So that's a little bit of a fine balance at times, and I'll talk a little bit more about what we're doing and how we're tuning that later. Revenue growth is critically important. We do, as I've mentioned before, we're continuing to run intentionally high on our sales and marketing budgets. That is absolutely a function of getting the revenue to where it needs to be, and we're really extremely pleased with the way that's going. That said, it does have extra costs. So when we look at overall profitability, we see opportunities that as we continue to get the growth to where we need it to be, the ratios will come in line and profitability will follow along with that on an operating basis as well as a net basis. Obviously, our net is impacted by non-cash activities in a variety of different ways as well. So some of that really can't be controlled, but we're very focused on making sure the operating piece is where it needs to be. So with that said, I'd like to go over a couple of key growth statistics so that we can kind of help understand the magnitude of the growth in these areas. We saw 44% growth in our Overwatch revenue from fourth quarter to first quarter. We saw 65% growth in our paying clients. That was coming off of 300% growth for the second half of 2021. So that it's pretty substantial what's going on there. We're looking at the opportunity to see growth and to achieve over 1,000 paying customers in that Overwatch portfolio in the managed security services alone. We had targeted end of year. We're optimistic that it will be sooner than that, and we'll announce that as soon as that happens. That's a pretty substantial milestone for the organization, and like I said, we believe that we may get there sooner than the end of year target that we've set for ourselves. So we're very excited about that. Our revenue and our client acquisition, our partner acquisition is increasing, and that's actually in every segment of the business, but in particular, it's happening fastest in the Overwatch segment, followed by our technology segment. The funnel is expanded significantly in the Overwatch segment, as well as generally speaking across the business, and the funnel is a precursor to continued revenue growth. So the expansion in our Overwatch business has been phenomenal. In our human capital management segment of our technology business, actually crosses technology and managed services in some ways. In that human capital management business, we're actually going to start focusing on containing our growth in that segment. It's been substantial, and we brought that part of the organization. We nearly doubled the run rate that it's on. In fact, at one point, the run rate was over twice what it was in March of 2021. So we're really excited about the growth, but we're going to focus on chilling that growth because of cash efficiency and making sure that we can not only manage to profitability in that segment, but actually generate better cash flow out of it and use our cash wisely, because our focus is on pushing all of the operating capital that we can into the high growth, high value segment, high enterprise value segment in our Overwatch recurring revenue and all of our managed services portfolio. So we look to chill that growth over the second half of the year and leverage that for better cash flow. The funnel and bookings in our technology and management sectors were both on track for the quarter for what we need for the year, which is outstanding. We look forward to continued growth for the balance of the year, and that all starts with strong bookings in first quarter. First quarter traditionally has some seasonal challenges, as you have a slow start typically with the holidays, coming out of the holidays. The cycles of the business over the last couple of years with COVID and the disruptions related to having people on site and being able to deliver, on top of that, the supply chain, they were pretty substantially disrupted over the last couple of years. We're starting to see a return to normalcy. Normalcy would indicate that we see a pretty significant uptick in Q2 and Q3. Early part of Q4 should be pretty strong, and then it starts to taper again into the holidays as hospitality and those sorts of industries are affected with seasonal shutdowns on network freezes and the like. So we're very excited that we see that normalization. We're looking for that trend to continue. We're looking for the highs to get higher and the lows to be higher as well, as the recurring revenue will start to moderate through and it sort of mute the cyclical effects on the business. We're also looking to continue to try to find opportunities for counter-cyclical programs that will both bolster some of those lows. So very excited about where that goes. As we now have all of the businesses moving the right direction, we've started to take the steps that are required to get the company better financing terms, get the company lower cost financing terms, and start to focus on flattening our capital structures, as it's critically important for us to execute on all of the goals that we've previously stated. And that will really be a focus of the next 2 quarters, is trying to work on those pieces of the business. I could not be more pleased with the growth part of the business. The management team is operating extremely efficiently at managing through that growth, because it does create challenges in just day-to-day operations when you're growing at this kind of pace. So we're looking to make sure that we balance that growth with cash flow, with the right financing structures in place, and continuing to put the business on solid footing for the go forward. So with that, thank you for watching. Thank you for your support. And we look forward to a strong second quarter and beyond for 2022.